Rebecca Grinspan, Secretary General of the United Nations Conference on Trade and Development, otherwise known as UNCTAD. Thank you for joining us on State of Freight. President Trump, as you know, has sent a series of letters informing countries of their tariff rate. What is UNCTAD's concerns about this global trade war?
Well, first of all, we have to say that since April, the U.S. have signaled that it wants to negotiate trade agreements with the countries. And I think that that is a good signal. But at the same time, we know that trade agreements are complex, that they take time. And so we also see uncertainty, carrying on to be the main issue here for investment, for growth, and for trade. So we are worried about the high level of uncertainty that is bringing investment decisions paralyzed, trade down, and growth to be revised downward.
You know, and with the uncertainty, as you have seen, the China Plus One supply chain strategy for U.S. companies has now evolved. And on the flip side, China Plus One actually helped the economies of like Vietnam, Cambodia, Malaysia, India. But now things are changing. Is UNCTAD concerned that this trade war is going to impact the economic growth of these countries?
Yes, we have seen already, and when we have projected an important impact of the trade war on these countries. If you take the least developed countries of the world, 46 countries that are the most vulnerable, we project that their export could be impacted as much as 54% down if the tariffs are put on them. And for Africa, for example, in the African countries, this is even worse because on top of the tariffs, they are losing their preferential access to the US, like with the AGOA, the African Growth and Opportunity Act, that they probably won't be renewed. So two impacts that will really hurt the most vulnerable countries in the world.
Are you seeing more development as it relates to the trade deals with China? We have seen China, just recently, of course, announcing the announcement for the other Asian nations. Where do you see China playing into this? And are they going to seize an opportunity, if you will, of expanding their trade with other countries as the United States kind of closes itself off?
Well, actually, China offered a free access to the African countries, and they will negotiate something in those lines. So we already see that happening. But our main concern still is that to change markets is not so easy. Yes, still the U.S. market is very important for these countries, and they will be very quickly impacted before they can move to a different type of production or product for the China market. So to substitute the U.S. market will be still a very painful process for all of them.
Is it right to assume that in the coming years, countries around the world are going to do their best to diversify their supply chains away from the U.S.? How do you think this is going to impact the global supply chain?
Well, we see already a disruption in the global supply chain, and in many ways because of many impacts, but obviously the impact of tariffs. And let me give you an example on what is happening to these vulnerable countries. I said that they will be impacted with tariffs, but they also are impacted because the tariff they will endure if the announcement takes place in real time. They will face higher tariffs than other developed countries. So it's not only that they have to confront the tariffs, it's that in comparative terms to other markets, they will be worse off. And obviously, if that is so, the global supply chains will have to adapt to that new reality.
You point out, the impact of tariffs. Tariffs are layered. And so a lot of people out there don't realize that. They say when you read 35% for a certain country. It is more than that. Can you kind of dive down into this layering effect of what emerging markets and the smaller countries are really facing when it comes to this global trade war?
Well, yes. Well, in this case, for example, yes. First is the impact of the 10% that is general to everybody. So if we take again the most vulnerable countries, that 10% will mean for them 21% decline in their exports to the US. If you go to the preferences, to losing the unilateral preference access to the US market, that will add another layer of impact into these countries. And if you put the reciprocal tariffs even on top of that, is where you get the 54% decrease in exports from these countries to the US market. So obviously, this is like a cascade. But also, let me say, most of these countries will do buy inputs for those exports from the US. And so those inputs also are being impacted. So the value chain is being disrupted completely when you do that.
You know, when you look at the impact on the, across the world with the tariffs, it's also hitting here at home with the United States. You know, the recent CPI data shows the increase in prices on imported goods from apparel, footwear, appliances. And these are countries' economies that are interconnected. Do you think that the rise in price where we're seeing here with inflation is just the beginning as we move forward with this trade war?
Yeah, the US economy is very resilient, and we have seen that in this first semester. But we have already seen an increase in prices. And I think that if the tariffs will have the wide range impact that we are seeing with many countries being impacted, it is very difficult to think that prices won't increase because of that. And also, you have other things happening also in the maritime transport, and so that, as you said before, this is layered. For the moment, we don't have such an extension of tariffs as has been announced because the deadline has been postponed. But if it will be as wide as has been announced, it's very difficult not to see an increase in prices in the US.
You know, foreign trade investment fell for the second consecutive year. What is your outlook for the rest of this year? And actually, do you have to amend your forecasting because this is so fluid?
Yeah, we saw an 11% decrease in investment in 2024, and we are already seeing in the first semester of this year very weak announcements and very weak deals in investment. So we expect 2025 to be even worse than 2024. Investment, you hear many of the CEOs saying, sit and wait because there is no predictability. And what you need for trade and for investment is predictability and trust. And I think that is what has been more impacted by the trade war.
And foreign trade is FDI, foreign direct investment, is so important for global trade. Yeah. It grew 300 billion in the first half of the year. What are things looking like, for the second half?
Yes, let me give you an example. It's true that trade has also been very resilient, $300 billion more in the first semester than last year. But if you look at the volume of trade has increased only 1%, vis-a-vis 3% in 2024. So we have lost steam in trade, and we think that if the trade war continues, that tendency will be deepened towards the end of the year. The volume has increased only 1% during the first semester.
Exactly. In terms of looking at the other headwinds with trade, the freedom of navigation is of global concern. You just had the Houthis are attacking again in the Red Sea. We've got the uncertainty between Russia and Ukraine. What is UNCTAD seeing in terms of these implications on these key trade routes?
Well, the Red Sea is one of the main arteries for maritime trade. And remember, maritime transport is 80% of trade. Trade happens with maritime transport in 80% of the global trade. So these choke points are very important. When they are disrupted, the whole system suffers. So let me give you an example. The latest attack in the Red Sea to the ships has raised the war premium in insurance 1% above the value of the ship. The value of the ship. So in average, 1 million more in only in because of the impact of the recent attacks. So we have had more insurance cost, more shipping cost, longer roads that we have to follow. And there was the expectation, because we had a calm period before, there was the expectation in the industry that things will go for the better, and that there will be positive developments. The recent developments are really a cold a shower on those expectations. And so trade is very much affected in their cost, and the shipping industry is very affected by it. So this is another layer on the tariff problem of prices, because we project that if this continues, there will be an impact on global prices of 0.6% increase, only because of the Red Sea. So if you add up the other factors, so we can be in a difficult moment in terms of inflation in the world.
How high do you fear in terms of inflation? I know it's very hard to kind of forecast because of all of these, uncertainties, but where are you at as of now in terms of looking at the inflationary impact on a global scale?
Well, it's difficult, and I haven't seen any recent projections that really give us a number with respect to inflation. But we have to be careful. Yes, we know that trade is not such a big percentage of the US economy. And that's why probably for the US, the impact, even if prices go up, is not so high. But in the other countries where you will see affected the external account, and you can have depreciation possibilities in the exchange rate. So inflation will hit them much harder because of that. And so there will be asymmetries in the world economy, but the most vulnerable countries we expect to be the ones more affected by these events.
Do you think as this progresses and we see these numbers and eventually the impact with the trade war, what kind of impact will we see on global GDP?
On global what? Sorry?
The global economy, the impact.
Well, we expect the global economy to grow 0.5 percentage point less this year. But I have to say that this is a lot, because we expected 2.8% growth for 2025. Now the expectation is around 2.3% growth. And this is already much lower than the growth we experienced in the last decade. So we are going in another step down on the growth perspective. So we are in a low growth path, and that will affect jobs, and it will affect the stability in many countries where even growth will be lower than the average in the world.
You know, let's quickly pivot to artificial intelligence. UNCTAD, of course, is keeping an eye on this. How is AI shaping global trade?
Well, AI is everywhere and it's affecting all industries across the board. It has enormous potential to improve productivity and to allow many countries to leapfrog. But the problem is how to make AI more distributed, the benefits of AI distributed better across the board. And that is the real challenge, how we will bring AI into the production structures of many developing countries that don't have the data, the capacities, or the infrastructure to be able to take advantage of the new technology. So investment in data, in capacities and infrastructure are key for these countries to catch up and to be able to bring the benefits of AI also to their populations.
How many years, Secretary General, do you think it'll take for those countries to actually get up to speed, if you will, when it comes to AI?
Well, it will depend on what the world will do. Yes, and the financial side of it is the most important part. We need the multilateral development banks to crowd in private investment so investment can flow to these countries and they catch up. They can catch up in infrastructure, as I said, on training and capacity development, on data harnessing. And if the financial and the private sector are able to invest in these countries, if we can bring the risk perception and the risk of these countries down for the private sector to come in, we will do much better. If we are not able to do that, and to crowd in private investment, to bring the multilateral development system, to support these countries. So I fear inequalities will deepen and the gaps will grow instead of reducing.
Secretary General Greenspan, thank you so much for joining us on State of Freight.
Thank you very much.